Hi guys. In this session, we'll discuss about collateral and margin because this is on demanding session. I just wanted to discuss in details. So in next 10 to 15 minutes, we'll talk about what is collateral and what is margin, how collateral and margin works. So we'll discuss in details. All right. So let's talk about it. See, if we say collateral it means assets. Collateral it means assets. And assets it can be your properties, stocks, bonds, ETFs, currencies, gold, or it can be any precious metals also. So, see, when we say assets, there are two types of assets. One is tradable assets and another one is non-tradable assets. But these assets, see, you can relate in terms of both like tradable as well as non-tradable. The difference between tradable and non-tradable is if I talk about property is non-tradable assets because property which is not listed on a stock exchange like NSE and BSE. But if I talk about stocks, bonds, ETFs and currencies, you can directly buy and sell from the reputed stock exchanges like National Stock Exchange and Bombay Stock Exchange. So that comes under your non-tradable assets. But yes, so all that in assets you can treat as a collateral. Now what is the role of margin in collateral? Margin it means guys loans. Margin it means it's a pure loan, right? Why sir margin is required? Let's talk about that. Why we need a margin in this particular process. Let's say there is a person called A, right? There is a person called A. A has account open with, let's say, broker, right? So you can say this is your trading accounts. So A has account which is trading account, or here specially if you want to deal with margin, so this A person will have to also open account like margin account as well, right? Margin account. Then let's say this broker offer facility to trade security from NSE, it is National Stock Exchange, right? It's an exchange platform, correct? So here exchange has listed securities, let's say Wipro, because all are stocks. Now we are just talking about stocks, right? Let's say TCS and HDFC Bank, right? HDFC Bank. This A has let's say 10,000 rupees in the account available, right? Let's take an example. Wipro price which is at 500 rupees, current market price that I'm talking about, right? Current market price which is at 500. TCS price which is at, let's say 4,000 somewhere, right? 4,000 rupees somewhere, and this HDFC which is around at 1,500. Now if this person, let's say, buy TCS shares in the amount which is available in the account is 10,000. So this person A can buy only 2 shares, 2.5 it means. So we cannot buy shares in split. So here only we can buy the shares, you can say which is 2 shares, right? 2 shares that we can buy it. But here the catch guys, if I have a let's say small capital, and what if I want to purchase quantities in bulk, right? Let's say if I want to purchase a quantities of 10, how can I buy it, right? If I want to buy 10 quantities of TCS, how can I buy it? Because 10 quantity would be, let's calculate it, 10 would be somewhere 4,000 into 10, it would be around somewhere 40,000 rupees, and I have only 10,000 rupees capital available in my account. So now you tell me how we can buy this particular stocks. But this person is looking for at least 10 quantities. This person is looking for at least 10 quantities, but the capital limit of this particular person is only 10,000. So how that person can buy maximum, the assets or maximum number of shares of TCS. And here you can learn one thing, which is margin will enter. So this person can approach to the broker, right? This person can approach to the broker and ask broker to do one thing. I have my down payment. This portion is like something down payment, right? I will pay my down payment. You can treat as an initial, margin, my own margin, and I'm also looking for additional 30,000, right? 30,000. So can you please arrange these funds from others? So to deal with this, particular trade, broker can reach out to the bank. So the banks who are like dealing in, let's say, the banks who are dealing in your market, like money market, right? So bank will approach to the money market participants and send this requirement to the banks like SBI, HDFC, Axis, or all other banks, stating that look, I have a party who is looking for a margin of 30,000 on shares of 10, and the TCS shares has a strong capacity. So if you can provide 30,000 margin to this person on collateral of TCS shares, then this person is ready to deposit that shares with us, means under broker. So broker will take the custodian rights of this particular shares. Apart from that, this person is ready to pay interest payment as well. Interest payment. So generally in money market you would see like 1% or 1.5% interest payment for per day. So 12 to 15% you can say, which will be around 15% for per annum. And the duration of this loan, maximum duration would be 1 year. After that you can roll it over if you want. So now here is the the important point is, if you see ultimately this margin, collateral and margin, which is something like a loan only, right? Because the broker is helping this particular trader to raise additional 30,000 from the market with market interest rate. So it means this is a loan amount where basically this person is looking for. Why? Because this person want to acquire the assets of TCS worth of rupees 40,000, 4,000 for per shares. It means looking for a 10 quantities, right? 10 quantities. So price would be somewhere 40,000, but this person had only 10,000. So this person wanted to acquire more shares so that this person can multiply the returns. So how this person can multiply the returns? Let's talk about that. Let's say broker arrange the funding with interest payment of 1% for per month, right? Every month. So it means annually interest payment, if you just calculate, it would be around 12%. So basically this person means, this person will bear 12% interest payment for per annum. All right. So now let's talk about some calculations, how it works. Let's say TCS stock price as it is in its collateral, right? Started from 500, 4,000, 4,500 and 5,000. So here you can see quarter 1, quarter 2, quarter 3 and quarter 4. Let's say price started from here, trade was placed at this level, right? And then again stock price, let's say, reach like this because it is continuously growing company, and reach to this level, which is, let's say, 5,000 for per share, right? Let's say this one, 5,000 for per share. So if you see, trade placed, it was at 4,000. Current market price, so this was like, trade price. And now at the end of this particular quarter, let's say 4, the stock price which is reached to at 5,000, which is your current market price, right? If this particular trader, let's say, sell this security, assumption is sell shares at this price, let's calculate the profit, because total quantity, it was 10 quantities which was purchased on margin, right? If you just exit the 10 quantities, 10 into 5,000, it would be around 50,000, total revenue. Out of 50,000, just minus your quantities, so which you had just purchased it out. So 40,000, right? So net your profit percentage would be 10,000 rupees profit which you have realized. So out of this profit, what you can do? So 40,000, this is something you can also return the loan first. Return the loan because which was taken from the broker. Return the loan which is 30,000, and on 30,000 interest payment would be, let's say this was for entire 12 months, 30,000 into 12% divided by 100. So bar 36,000. So it means 3,600. So this also you can pay to the basically broker. Broker will again share this with the bank or whoso your counterparties. Broker will share this, right? So now in this case, if you see net profit, just calculate the profit. Profit is, which is something, your 10,000 profit you have received out of 10,000. 10,000 minus 3,600, which is the interest cost on the loan. So net profit would be 6,400 that you have generated out of this loan. Sir, now your question would be like, why I did all of this? See, the point is, if you just purchase two quantities, your profit would have add somewhere two quantities into 5,000. So it means 10,000, right? And your capital was only, you had like 8,000, correct? See, calculate this, 8,000. So it means in this scenario, without margin, your profit would have at only 2,000 rupees. So to multiply your profits, you took a risk. You took a loan from the brokers or maybe broker sponsored banks. You took a loan from the bank, invested in such assets, that assets price increased or up, continuously up, reached to the certain level. And when you feel that, you can easily recover interest cost plus whatever amount means that you have raised as a margin, as a loan on collateral, that you can repay to the broker. Then you can take a exit. And same thing that we have discussed over here also. See, the important here is why we means how this collateral works. See, when you take a margin from the brokers, broker will ask for a control. So it means broker will take the control of your particular assets. So this is exactly works like a home loan. In a home loan, what happened? In a home loan, when you apply for a home loan, basically broker basically what they do, broker eventually, hold on. So broker basically apply for a loans, right? And then once they apply for loans, what they do? So if you see here, in a home loan case, they take the control of your home loan, right? They take the control of your home loan when they want it. So until you repay the loans of that property, so bank basically take the control of your collateral, and then once you repay the entire principal plus loan, then bank transfer that collaterals to the respective that particular party. So same way here, broker works as an intermediate between actual party, means banks, and let's say a borrower, because borrower borrow the loans on interest payments, use that loans for 6 months, 2 months, 4 years, whatever it is, and repay that loan once the particular the maturity, or maybe let's say after the fulfillment of your investments objectives. So here two things are important. One is the role of broker maintain your the margin accounts. So we'll discuss that in details in next session, like how margin maintenance, types of margin, initial margin that works, all right, and the role of a bank, how banks come into picture, and then again role of investors and all other counterparties and clearing agents also, and even stock market as well. See, basically in a FX market or in an index, even stock exchanges also offer that margin, right? But the margin ratios and all in details, we'll cover that in our next session. So yeah, here I'll just take a pause now, and I'll request you guys, if you like this session about what is collateral and margin, so please do like and share this content with others, and also subscribe to this channel as well for more and more such, very the important contents which will help you to add values in your career. All right, so we'll see you in next session on collateral and margin. Thank you.